Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues in India and overseas. Well, earlier this week, 11 million documents held by the Panama-based law firm Mossack Fonseca were passed on to a German newspaper, which then shared them with the International Consortium of Investigative Journalists. In India, reports published by the Indian Express, which is part of this consortium, show how the Panama-based company helped the rich and the famous across the world, including many in India, launder money and evade tax. Given the close links between money laundering and underworld activities like smuggling, drug and human trafficking, and even more worrisomely, terrorism, the world can no longer turn a blind eye to such disclosures. What is it about money laundering that makes it almost impervious to attempts to governments across the world to rein them in? Is it because these very same governments are not really serious about cracking down on money laundering, despite the extravagant lip service to the cause? Why do tax havens flourish? Mind you, the list of such havens, according to many, would include not just the Canary Islands, British Virgin Islands, Panama and so on, but what many consider perfectly respectable jurisdictions like Switzerland, Ireland, Singapore. Over the next 30 minutes, we're going to take a close look at the entire issue of money laundering with two experts who've been tracking this issue for years. I have with me Professor Arun Kumar, formerly with JNU, and Rashmin Sanghvi, the Bombay-based chartered accountant whose expertise is often drawn upon by tax authorities in India. Let me start by asking you, Arun, a question that seems a bit facile, given how universal human greed is. But what is it about money laundering that makes it such a global phenomenon? Surely people fear the arm of the law, if not in India, at least in Western countries, even if they don't like to pay their taxes. So what is it that drives the activity? Is it the confidence that they're really out of the reach of law, whatever governments might say?
Yes, you're absolutely right that people know that they can use these tax havens and the interlinkages amongst tax havens to try and put a veil of secrecy. They're very clever chartered accountants and lawyers and other such people who help, and they create this web. So in other words, the entire global financial architecture gets involved in doing this, and that's what comes out of the Panama Papers, how firm this MF for short in Panama was in touch with British Virgin Islands, Bahamas, various other places, and they were moving funds, they were making companies, etc. So in other words, the Indians whose names have come out is only the tip of an iceberg, because Panama is one of the 90 tax havens that are listed, and within Panama there are many firms, and MF is only one of the firms. So my estimate is that probably a few 100,000 Indians have funds abroad or companies abroad, etc. And only 500 names have come out now. In the earlier list, you saw that about 1,500 names had come out. So we are talking about 2,000 total names that have come out in the four lists that have come out in the last 5-6 years. And of that, 500 is now being added to that. So in other words, what we find is that for the Indian businessmen and Indian entities, which includes professionals also, not just pure businessmen, but also professionals like doctors and others, this has become a way of life. That's why if you remember the BCCI case, when BCCI went out of business in 1991, at that point many small businessmen and professionals were also found to lose money. So this shows that it's been a long-standing process in India and also in the world. All over the world. Yeah.
Rashmin, Arun talked about 90 tax havens, but there's still some confusion about what really qualifies as a tax haven. While some would limit the list to places, as I said, like Isle of Man, British Virgin Islands, Panama, etc., others would include many other countries that we normally think are respectable, including countries like Switzerland, Mauritius, Singapore, Ireland, all of which vehemently, Austria, all of which vehemently protest against their inclusion. So how would you define a tax haven, and how do they really facilitate money laundering?
I would define a tax haven as a country where the government itself facilitates hiding your wealth. They create the laws in such a manner that people can hide their money, whether it is just black money or terrorist money or criminal money. So they don't have any taxes on the foreign wealth which come into their country. They don't have any foreign exchange controls, so that the money can come in, money can go out at any point of time, and the entire legal system is so arranged that everything remains hidden. That is a tax haven. And while Professor Arun Kumar mentioned that there are chartered accountants and tax consultants who facilitate this, let me make the list complete. in addition to the professionals, there are banks, there are governments, and there are politicians who all together facilitate a tax haven.
Arun, would you agree with Rashmin's categorization? More to the point, how are these jurisdictions able to get away with such blatant disregard for global censure? Is it because of the reluctance of governments to crack down on them, despite the lip service that I spoke about, and efforts like the OECD's Financial Action Task Force (FATF), the move to curtail base erosion and profit shifting (BEPS), passing of laws like the PMLA, the Prevention of Money Laundering Act, etc.? If economic sanctions can prove effective against South Africa, Iran, etc., surely it could be effective against many tax havens, many of which are tiny jurisdictions, will not be able to survive if this kind of activity is ended. After all, the Panama Papers are not a first.
You're right that the big countries and their governments are involved. For instance, the largest number of tax havens belong to the British. And the British set up these tax havens in the beginning, soon after colonization was ending in the 40s, because earlier they used to get funds from these colonies via what are called home charges and other drain of wealth that took place from the colonies. Once that stopped, then these things were set up, these tax havens, so that the money of the rich could be siphoned out of the developing countries into the advanced countries through these mechanisms. You also find, for instance, Delaware in USA is a tax haven, and the largest number of insurance companies have actually been registered there because there are specific advantages that are afforded by Delaware within the USA. Similarly, in secrecy index, you find that actually USA is above, Panama even, and UK is very high on the secrecy list. London acts as a financial center where large amount of these movements take place through London. Because that's an advantage to these countries. So in other words, there are two kinds of things that you see. One are the small islands that are there, which are independent, and there this is a very important source of income. But the other is that whatever funds go to these tax havens, large amount of them go to the advanced countries, and therefore the advanced countries get additional capital, and that's something that they have been looking forward to. But it's only after 2008, after the global financial crisis, that when Mr. Obama mentioned that the US is losing $100 billion as tax, that the OECD countries started cracking down on this phenomenon of tax havens. However, there is not full consensus because they should actually first affect their own principalities, their own jurisdictions. And if they are serious, if they did that, then I think other tax havens could also be tackled. So it's right that there's pressure on Switzerland, there's pressure on other countries to dilute the laws. But as we know, Switzerland's banks are shifting to Dubai, they're shifting to Singapore, and therefore, the pressure in Switzerland should be not only on Switzerland, but also the financial entities emanating out of Switzerland. Otherwise, it'll be very difficult to control it.
Rashmin, let me toss that question to you. Arun says that the developed countries' governments are hand in glove with these smaller, tax havens, and that is why such relatively small countries are able to continue to function like this in the face of global pressure. In the past, many countries were willing to turn a blind eye, as he said, because of vested interests. But post the global financial crisis, as tax revenues across the world have shrunk, governments have become more concerned about revenue loss and also about these tax havens now being used as conduits for terror financing, something that we have known for years. Also, since bearer shares seem to be the main problem in tracing the beneficial ownership, would it not be easy for countries to simply prohibit their residents from owning such shares? Closer home, do we have participatory notes which do allow almost the same kind of thing? It's obfuscation of beneficial ownership. So are there many players, all of which are hand in glove? And if you really wish, you could do something about it.
Mythili, you have and Professor Arun Kumar have hit the right cause. If USA promotes 3 tax havens within USA, if Britain promotes several tax havens across the world, and it is the tax consultants sitting in London, Mumbai and Chicago that move the black money from one place to another through all these tax havens. It is the world's largest banks which do it. Now, unless and until the powers have their own vested interest in these tax havens, they would not work. You have hit the nail when you said participatory notes. Now, the whole country knows that participatory notes are used for round tripping of black money. Why doesn't government prohibit it? Or why doesn't government ask that you give me the ultimate beneficial owner's name? Government of India is not asking for it. Now it shows what is the reason why tax havens flourish.
Well, that is true. But Rashmin, if I could ask you, I think part of the problem is
Yes,
that every time the
yes,
government or the finance minister talks of cracking down on participatory notes, there is a immediate
yes,
outflow of funds from the stock markets, and the stock markets sink. So I think governments
yes,
everywhere do
yes.
tend to worry. And would you not agree that participation notes have come down over the years?
See, the point is, when we look at just one or two forces which facilitate tax haven, we will not find the answer. There are several forces working simultaneously so that this system succeeds. There are big global financial institutions whose whole business is to run black money. They set up several trusts, they set up participatory notes and several other instruments to hide the names of the real owner. So it is in the interest of the financial institutions that tax havens succeed. Now these financial institutions control the world's stock markets. If they feel a threat, they will pull out the money, the share markets will collapse. Now, every time you want to take action against a financial institution, they will say your share market will collapse. Now, can a government permit itself to be blackmailed by a financial institution? Whenever we talked, whether it was in the year 2000 or it was in the year 2015, the same threat was given.
Yes, I think Arun, you have something to
Yeah.
add over here, right?
While the stock markets may
please.
go down if the funds are pulled out, this may be a one-shot thing. And if your economy is
Exactly.
robust and if it's
Exactly.
moving well, then the funds will come back. Because, for instance, we've seen that India's rate of growth is higher than that of the rest of the world, and FDI has gone up as a result, in spite of the many problems that the FDI has faced in the Indian context. So I think one should not worry about a one-shot decline. One should worry about what the long-term consequences are. Some people, of course, argue that because of these things, we are getting capital to flow into the
Hot
country.
money, absolutely.
However, our own estimate is that the black economy is roughly 60% of GDP. Out of that, 10% goes abroad, which is 6% of GDP.
Okay.
But what is FDI? FDI is less than 2% of GDP.
Sure.
So what we are getting is 2%, but we are losing annually 6% of GDP. So in other words, if you are able to check the size of the black economy and check the flow of funds abroad, then you will gain far more than what you lose in terms of this participatory note route or something else not allowing FDI to come in. So in other words, we have to look at the net balance. In the net, if we check all this activity, we'll be a net gainer rather than a loser.
Very true. But governments everywhere do tend to be scared of financial markets, and our government is no exception, I guess. But I'm afraid on that note, it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the fallout of the Panama paper revelations and what is the underlying logic of the continuance of these tax havens. Why aren't governments and the world economy able to do more about it, to crack down on them? Arun, tax havens, as we were talking, and as Rashmin and you also mentioned, are only one set of players. They really cannot do anything without complicit banks as partners in crime. And this is where the role of large banks comes in, Western banks in particular. Banks are supposed to be the bedrocks of public trust, however. And as we are seeing, many of them are anything but. Were there regulators also sleeping on the job? We've seen many banks being asked to pay big fines. But how many bankers have we seen being sent to jail? Should we not question them as well?
You're right. Actually, it's the system. In a sense, for instance, in the US, you've had several Treasury secretaries who've come from Goldman Sachs. And in 2008 crisis, that when AIG was failing, it got $350 billion immediately as a backup, whereas General Motors, which is larger than AIG, has more employment, could not get $25 billion even for 6 months. So as people say, there is a domination of the world of finance, what people say Wall Street over the Main Street. And it's this, the whole nexus of Wall Street, as it is called, which involves large banks, insurance companies, which, credit rating agencies, all of them put together are actually running the financial system. And as you know, the financial system, which is more than $600 trillion, is 10 times larger than the real economy. And that's where the pressure comes from the financial system on the policymakers that they have to allow these various kind of concessions. So you've had a situation in which even Mr. George Soros said 3 years back that rich should pay more taxes. He said that I pay less taxes than my secretary, because of all the various arrangements that are available. And following George Soros, then the German rich, the French rich, and the Italian rich also said that we should pay more taxes. Now that's also something that India we have to worry about, that our rich are not paying the taxes that they should be paying. As a result, the burden falls on indirect taxes, and through that it falls on the poor people in the country. So this entire nexus is there to do the kind of tax planning that is available in all the countries, where the rich get off with paying less taxes, rich get off by moving their funds to the tax havens, the rich get off by moving their funds around the world so that they don't have to pay taxes, and that's why the BEPS issue has become a major issue.
So we go back to the 1% against the 99% entire debate that we saw 2 or 3 years ago. But Rashmin, given the thin line between tax avoidance and tax evasion, ultimately are laws like the US FATCA, the Foreign Account Tax Compliance Act, the only way to go? But what hope do other countries have to match the US clout in such matters? We haven't had much success even in fixing things like, the place of effective management, where the government has been forced to defer its rules by a year. So what can a country like India do? Even if we ask for information very often from tax havens, they don't bother to comply to our requirements, whereas they do accede to requests from Germany, from the US. So what can a country like India really do to crack down on this kind of money laundering?
Okay, Mythili, I think a lot of work is now going on under the leadership of G20, the group of 20 nations, and OECD. BEPS reports have come out. Under the BEPS report, there is a common reporting standard. So globally, almost 90 countries have accepted to share the black money information, terrorist money information with all the concerned countries.
But the US is not a participatory in this.
That is true. US always says that nobody can evade US taxes, but if people evade your taxes, I am least bothered. That is the US approach forever. But the point is, US is being sidelined, because when 90 countries agree, and if 89 countries agree that we will share information with each other, then if one country does not share, I think slowly people will realize that US is alone. So I'm not too much bothered about USA. These countries have agreed. Then under Prevention of Money Laundering Act, already there is a system that about 90 countries automatically share information of suspicious transactions. So every bank is supposed to report immediately suspicious transaction. Do you know why Hassan Ali Khan, even yesterday his name has, or today his name has come in the papers, why the whole information came out? It came out because of PMLA. Now PMLA, a very vast provision, together with sharing of information, country by country reporting, all together, I do believe that black money holders are in a difficult situation. Though people who are under the protection of certain powerful lobbies, they may not be hurt. Rest of the people will still be hurt. So the world is moving towards more transparency, and a lot of tax havens also will suffer. See, under BEPS report, there are so many amendments, and I tell you, in our Indian government, within the CBDT, there are some income tax commissioners who are geniuses, and they have been instrumental in drafting the BEPS reports. And in 2 years' time, you will see that for Singapore as well as Mauritius, it is going to be extremely difficult to facilitate round tripping as well as treaty shopping. So to an extent, or to a large extent, tax havens will be affected, and seriously affected.
Arun, isn't Mauritius a holy cow as far as governments in India are concerned? Correct. So now most of the investment that we saw earlier coming from Mauritius now comes from Singapore. Yeah. But is the government going to do anything against either? In fact, we just had the Singapore Deputy Prime Minister yesterday say that yes, Singapore is willing to comply. Correct. But the fact is that a lot of the money that was earlier coming from Mauritius now comes through Singapore. Yes. And will any Indian government, not just the present government, have the courage to really look them in the eye and say, look, we're going to end this kind of treaty shopping, not allow it to happen? Arun?
No, you're absolutely right, and I'd like to give the example of double taxation avoidance agreements, which we've had from 65, but the basic double taxation avoidance agreement was signed in 1990 with the US, and that became a template for other double taxation avoidance agreements later on. But under the double taxation avoidance agreement, we have not received any information till now of who are the people who hold black incomes abroad or who have the assets abroad. And the point is that you see, double taxation avoidance agreement is about your white income, the declared income, and not about the black income which you did not declare. Because even if you have an exchange of information, it can only be about the declared income. So the point I'm trying to make is that you see the clever people are there in the world of finance, and they have ways of hiding how their flows are taking place. So I'm not so sort of sure that actually the changes that have been brought about in the last 8 years under the pressure of OECD will actually work unless the OECD countries themselves show that they have the will. For instance, if they change their tax laws, they make them more stringent, they make them more transparent. Until that happens, you cannot ask the tax havens alone to do that. So the US has to be more transparent, the British have to be more transparent, etc. The second point I want to make is that if you look at the information that has come out in the last few years, it is stolen information. LGT Bank in Liechtenstein was a stolen information by Mr. Kleibe to the German government. Faviani stole the information, HSBC, and gave it to the French. Now the information from ICIJ journalists was also hacked and leaked. It is not as if the banks are doing it, it's not as if the governments are doing it. So the lesson is that unless the governments are proactive, and the Indian government has to be proactive, if the German government could offer 4 million euro to Mr. Kleibe and get the information, the Indian government has to be more proactive. SIT has to be more proactive. Julian Assange has been saying now for quite some years that he has the data from the Swiss banks, but he's not able to reveal it because the person who stole it is under threat in Switzerland for prosecution. But if the government can approach Julian Assange and get the information from them, the Indian government can also approach other bankers, etc., in different jurisdictions and try and get the information from there. I think legally it may be very difficult to go and get information, but this method by which somebody who's a whistleblower in one of these banks or one of these financial institutions, if they come out, then that would be the right way to do. So proactive is very important. Without that proactive, just depending on some of these treaties may not work.
Rashmin, Arun seems to be less optimistic than you. Ultimately, yes, it is about implementation, it is about the will. And we've seen very little sign or will. As he said, almost all the details that we've got is all from stolen or leaked information, not from governments, not from banks sharing that information. So what makes you more optimistic, Rashmin, that implementation will be any better now following this revelation?
Let me tell you two more points, okay? While I agree with Professor Arun Kumar, see, when Indian residents' black money goes out by Hawala, then it goes into Mauritius and Singapore. Then there are some shell companies, and those companies then invest in India. And then they claim the double tax avoidance agreement benefit between India and Singapore or India and Mauritius. Here, the whole money right from the origin is black money. Yet it changes its color, it is laundered into white money and then comes back into India. So when these countries are attacked, when their tax haven, double tax avoidance agreements themselves are attacked, then automatically one route of round tripping will be closed. That is one point. Second point, the biggest information which came out was about Hassan Ali Khan, as he was alleged to have $8 billion. That came from government sharing information. It was not a stolen information. Because under PMLA agreement, government share suspicious transaction reports, these reports came around. Okay, and similarly, the kind of vast agreements which are now being entered, you will see that in 2 years' time, the official information exchange will be really robust. So if today somebody having black money is daydreaming that he will not be caught, then it is better that he should be warned. It will be the official formal information coming from government machinery where most of these people will be exposed.
Arun, are you a little bit more optimistic after hearing Rashmin very quickly?
You're absolutely right. Hassan Ali's information came from there. But every town in India has Hawala operators, whether in Chandni Chowk or farmhouses of Delhi or Pune or Bombay, etc. But why only Hassan Ali is caught, whereas nobody else has been caught in the last this thing? So, we have to be very careful about that. Second is, as you very well know, that there's a process of layering. Even if there's 2 tax havens in the world and you can layer through those 2 tax havens and then bring it to Mauritius or Singapore, it'll be difficult to track who the real beneficiary is. In this MF case now, because the information has leaked out, so you know who the real beneficiaries are. But if the information had not leaked out, you would not have known who the real beneficiaries are just from official information. So in other words, unless this data is leaked out, unless the whistleblowers are there, Even then, if there are official agreements, then this will not happen. So in other words, what I'm trying to say is that more than just the official agreements, we have to see that this financial architecture which has been created in the world, which allows large amount of secrecy, that has to be tackled. In the case of HSBC, we know that HSBC was acting as a Hawala operator from India, but Indian government has till date not acted against HSBC. Whereas in the US, you know, UBS Bank was fined $780 million when it was found to be doing all this. The Credit Suisse was made to pay $2 billion fine. The 5 banks which were manipulating the LIBOR have been made to pay $5 billion fines. Action is there. In India, we find, for instance, Satyam's case has been dragging on when Madoff, which was at the same time, was settled within 6 months and Madoff was behind bars. Raj Ratnam's case within 2 months, and you know, Rajat Gupta's in 6 months. But you know, in India, the cases drag on. So judicial accountability is very important. Implementation of laws is very important, and getting the right laws in place is also very important. But more than that, the implementation is very crucial.
Absolutely, but I'm afraid we're completely out of time, so I'll have to end this discussion right now. Clearly, the issue of money laundering is much more complex than it would seem, but where there is a will, there is a way, and governments all over the world, if they wish, if they really wish, they can bring an end to this kind of money laundering, because it endangers all our futures. Thank you so much, Rashmin as well as Arun, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.